Good evening, everyone. So it's Sunday evening, the 1st of November 2020. I'm just having a look at the global indices. I'm actually going to start off with the NASDAQ. I'm going to mix it up a little bit and really just talk about this. So because the NASDAQ tends to be driving everything at the moment, tends to be the leader, what I'm just going to highlight here is it's very, very much overvalued on the monthly time frame. And true value is kind of lying closer towards that 10,000 level. So what I'm looking for is to see price potentially here do a bit of a correction, come down towards 10,000. Now this is part of a very normal, healthy correction. It'll be a bit scary on the daily timeframes, but on a monthly time frame, it looks relatively decent. We've very much overvalued, and of course the move to the upside was extreme. The correction to the downside is going to feel relatively extreme. And so that's what I'm really going to be looking for as a kind of a reasonable, realistic potential big move to the downside. When I have a look at it on the weekly, we've got a lower high. If we break this most recent low around about that 10,813 area, then I'll be looking for price to head down towards that 10,000. Okay, so in the meantime, looking at it on the daily, price is at 11,000, and this may potentially hold. All right, so there are a couple of scenarios here in which it doesn't actually do that correction. If I find the price points, find support here, starts to head back up to the highs, and ultimately produces, let's just say, a bullish breakout pattern. That is a realistic scenario that could potentially happen. But what I'm looking for this week, because there's a lot of uncertainty in the markets, obviously this is very incredibly high risk trading at the moment. In fact, there's no way I'll be participating in the markets on these oils. The only one that I quite like the look of. Everything else to me is going to be incredibly high risk, and any participation in that, it's very difficult for me not to see that as just gambling. So at any rate, because I'm not really sure, and I don't think anyone can be, as to how the market is ultimately going to react to this. I do know that this overvalue does need to have a bit of a correction. I also know that it can hold support, potentially, and build up for a longer term breakout. What I would like to see, the most healthy thing for the market to do, would actually be to let off some steam, come back down to 10,000 over the next couple of months. We then have a Santa rally as we run into Christmas, and then see it build up, and then have a build up and start to regain its bullishness towards January and February as well. I'd be quite happy for that to be the case. Now, these are the key levels, is effectively 11,000, then 10,300, and so break below this could see price starting to head down towards these previous lows around 10.6, and then starting to head down towards 10.3. And on the lower time frames, I would of course expect price to work its way up, but I'm leaning towards it finding some support first, and then, so I know there's reluctantly, but of course this week it's going to be interesting to see how the volatility increases throughout Wednesday and Thursday. Again, if it breaks these lows, immediately then 10.3 then becomes a viable level for price to head down towards. If not, if you want a nice round number, then towards 10.5. So at the moment the markets are not looking strong. They are overvalued, looking at the S&P, then going up to the Dow. So the Dow has actually come back into previous highs, and this is a very acceptable area for it to find support. The problem is that it's double topped effectively. It's had several rejections of this 29,000 level, and if of course the NASDAQ does break lower, then the Dow is also going to break lower. It's going to pull it back down, and then for me it's going to start to aim towards 22,000. Of course, again, on the daily basis, in terms of the media, this is going to seem incredibly extreme, but it is predominantly about the NASDAQ. It's really about the NASDAQ finding its fair value, which is a lot lower, and unfortunately that is potentially going to pull other markets with it. We now actually have a downtrend on the weekly on the Dow, and that's definitely worth mentioning. It is sitting at monthly support now at 26,000, and it could potentially hold. So initially this week, actually might find the price climbs up towards 27,000, perhaps back into that range, or finds that where it was finding support, it now starts to find a bit of resistance, and then potentially heads lower throughout the latter part of the week. Comparing that then to the S&P 500, S&P 500 has no clear trend at the moment. It's got a lower high in the weekly, but it hasn't broken that previous weekly low, and if it does, then again that supports the idea here of price coming back down towards true value, which is closer to 3,000. All right, so previous resistance sitting at about 2,875, but 3,000 being a really good area for this to head down to if it's going to do a normal correction, similar to what it's done here in the past. That is just not that unreasonable. Of course, at the same time, if there's any optimism that returns to the markets, and again, I feel that we've had there's technical evidence to support this as well, that we've had a lot of we're actually overdue for a correction. We've had too much enthusiasm for most of this year. I love the fact that we had a strong recovery. I think that's fantastic. But at the same time, we've almost overshot it, and we need a bit of a correction. It wasn't a slow and steady recovery. It was an overly aggressive recovery. So That being said, my expectations are to see this certainly investigate the idea of hitting a little bit lower, but they can be incredibly resilient, and therefore level of support, the nearest levels of support on the daily, it wouldn't always surprise me if they tend to hold. Look at the mini Russell 2000. This one is still in an uptrend on the weekly, but definitely struggling with some resistance there, and potentially, although it's the 1st of November, we'll have to see how that monthly candle forms out, but has fallen back to this level of resistance, did not find support there, produced a really nice bullet candle, attempted to go higher, and then immediately fell back through that. So not a lot of bullishness at the moment in the markets, heading away from the US, going to the UK. This unfortunately does not bode well for us in the UK. We've fallen back in below the 6,300 level. We've sat below this level for 30 years. We managed to just get out above it, find bump our heads up against 7.4, and we're now heading back below that. In fact, this is a very bearish kind of formation. We are sitting at a very significant level where price can successfully find support, but if we fail to do that, then it's reasonable to me that we'll start to head down towards 5,000 and below that. But this is a very, very good level. So if the markets can stay above it this week, that's fine. And any moves, there's a nice little bullish candle here from Friday. Any pullbacks back up into this might find resistance, actually might be a potentially decent shorting opportunity to the downside. Looking at the DAX, Germany, solid, very strong rejection of that level, and having broken through these lows here, similar to oil, it actually started very bullish move to the upside, then sideways, and finally breaking down. So this is where I'm looking to see if there's potentially short opportunities. Similar to the FTSE, I'm going to be looking for pullbacks up into the moving averages here, and then potentially for shorting opportunities. Again, it's a timing of when I do it, because if it is right smack bang on the election, it's going to be high risk, and I would actually prefer not to do that at all. However, if it turns out, if the election does appear as though it's going to potentially be over relatively quickly, and the market feels as though there's a decision now been made, and there's still a setup opportunity and the trend looks good, then it might be safe. Spreads and volatility might reduce, and then taking that opportunity might be acceptable. Then just noting here on the French CAC, downtrend on that weekly, much lower high, solid resistance there. It's very clear rejection of that level, 5,000 level. Again, retracements back up into this, meaning there's now a downtrend on the daily and the weekly, could present some shorter term shorting opportunities. The same with the Euro stocks as well, similar type of pattern here, very nice and bearish. The Nikkei, these markets can be incredibly resilient, and the US markets are the ones to watch. That's why I started with the NASDAQ. That's really where I anticipate that the clues will come from. Price action here looking a bit weak on the Nikkei, and this was the one that was actually a really nice daily uptrend. It was looking really, really nice and bullish there, but it's very similar to the DAX in the sense that the Russell 2000, I beg your pardon, where it's started out bullishly, then kind of slowed, and now started to break to the downside. So I think it's reasonable to expect that this is going to head lower. Then looking at the ASX 200, that is just such a crisp rejection of that 6,200 level. There are going to be levels of support in this area. It's still technically range bound, but overall the price action is quite bearish, and these are big moves to the downside. So shorting opportunities, intraday shorting opportunities, maybe even Monday perhaps, and then just being aware of what the market does at that point. Certainly if any trades I take will have fixed stop losses, and taking profit as I go. But shorting opportunities. So in kind of recapping that, actually let's have a very quick look at Tesla and Apple, because they happen to be there. Tesla is very much overvalued. I'm a big fan of Tesla, but it is overvalued. It doesn't mean that in the long run I don't think it can't go back up to that, but I think in the shorter term, medium term, it needs to come back down, which means it's going to give back about half of its current value, which is going to throw people quite a bit. Let's have a look at Apple. Unless it can stay where it is and then the market can catch up to it, Apple's looking to come down to 100 or potentially a little bit lower. True value lies closer to between 100 and 80, somewhere around 90. That would be a decent retracement for it to do, and it's very much overdue for it. It's also got a lower high in the weekly, and that could potentially be the case. Not a really long way for it to go. Kind of puts down to about here, and then it starts to approach true value. So that could be a very healthy correction for Apple, and then again picking up around Christmas, because people are giving other people phones and sales pick up, it'll recover from that. So overall on that, quite liking the look of that. Let's just have a look at Euro Bund as well. The Euro Bund starting to break out of that. So bonds, I'm potentially when stocks become higher risk, bonds can be quite appealing, and this is looking quite nice and bullish. That weekly is really bullish. That's beautiful. The daily a little bit gappy, but otherwise performing pretty much as per this kind of trade call, and this looking very nice on the monthly. So euro bonds, very nice and safe compared to, say, stocks at the moment in terms of that. Now, just to recap, so I'm watching the NASDAQ. My expectation is well, first of all, I want to watch and see how it handles these support levels. If we manage to get a nice rebound on Monday, there might be shorting opportunities in some of the weaker ones later in the week. This is overvalued. It does have to move down, and there's no doubt in my mind that if it does start to break lower, it's going to pull everything else down with it. Hopefully, some of them will not be pulled down as much. S&P and Dow, hopefully not so much. I think, but for the most part, with the general uncertainty, the market is either going to predominantly tread sideways or potentially break lower, and so I'm going to be incredibly selective and also incredibly cautious. And that being said, I'll also be live streaming from my desk Wednesday night from the UK, probably into the early hours of the morning, just be at my desk, just watching the markets. I don't think I'm going to be able to sleep. I think I'll be up wanting to see what the outcome of the election is. And so I'll be monitoring it until I get to a point where I go, okay, I'm going to head to bed. There is, if you want to join me on that, it's going to be open. I might do it as a Zoom, but I'll do it as a stream as well. I'll be please then just either find it on the YouTube channel, and so obviously ideally click like and subscribe, and you'll be notified when I'm live streaming. It'll just automatically tell you that. And that's it, ladies and gents. I want to wish you a wonderful week, and hopefully everything turns out as it should. Thank you.